I spent 18 years in a suit and tie sitting behind a desk writing mortgages for a living. And I'm going to tell you something that might sound crazy coming from a former banker. But the most dangerous document most Americans will ever sign is not their home mortgage. It is a 15 or 20 year RV loan at $600 a month. Right now, somebody just walked off an RV lot feeling like they cracked the code. $600 a month. Freedom on wheels. Their spouse is already picking out throw pillows for the theater recliners. 3 years later, that same person wakes up $30,000 underwater, owing way more money than the RV is worth, staring at the ceiling, wondering what went wrong. They didn't buy freedom, they bought what I call the intersection of doom. Before you click away thinking this is another guy telling you not to buy an RV, stop. I live this life and love this life. I'm mad, one half of mad and mean. I'm not sitting in a studio apartment reading off of Wikipedia. I don't work for the financing department at a local Camping World. No, I am sitting inside my RV right now, and after everything, my banking career, a near fatal accident, and the decision to go full-time on the road, I learned something the hard way. There is a massive difference between owning an RV and being financially free in an RV. So today, we are pulling back the curtain on 3 ways RV financing quietly destroys people. Number 1, the monthly payment magic trick. Number 2, the interest rate markup nobody explains. And finally, some mad math that will show you exactly how people end up trapped. If you're already underwater, stick around to the end because I got 3 specific escape routes, including one I call the nuclear option. Let's get to work. The first one is going to be the monthly payment magic trick. When you walk onto an RV lot, they aren't selling you a vehicle. They're selling you a Tuesday morning by the lake while everybody else is stuck in traffic on the interstate. They show you the kitchen island, the fireplace, the outdoor mini fridge. Ultimately, they show you how awesome RVs are today. And they are really kind of hard not to like. They show you everything except the depreciation curve. Instead, they show you the fantasy, and I get it. I love RV life. I live it. That's exactly why I know how easy it is to fall in love on the lot. Then you walk into the little back office, finance and insurance. The entire conversation shifts. It goes from, do you want this RV, to what monthly payment can you live with? That right there is a trap, my friends. Here's a quick pop quiz. What's cheaper, an $85,000 RV at $600 a month or the exact same RV at $900 a month? It's a trick question. Neither one is cheaper. The price of the RV didn't change by a single dollar. They just stretched the debt further into the future. 10 years, 15 years, 20 years. For a rolling box made of fiberglass, aluminum, glue, screws, and enough staples to build an entire kindergarten class worth full of macaroni noodle necklaces. The longer the loan, the smaller the payment looks. That's the magic trick. They didn't make the RV cheaper, they made the payment smaller. That is like saying you lost weight because you bought a bigger mirror. When you finance an RV for 20 years, you end up paying an incredible amount of money just for the privilege of borrowing it. Which brings us to the second trick, and this is where it gets sneaky. The interest rate markup and the parade of products. When a dealer sends your credit application to a lender, the lender comes back with what's called a buy rate. Let's say the lender's buy rate is 6.5%. That does not mean 6.5% is what lands on your contract. Depending on the lender, your state, and how the deal is structured, the dealer may be allowed to mark up that rate. Maybe your contract says 7.5%, maybe 8.5%. A 1-point difference sounds harmless when you're staring at a piece of paper across a desk. You think, what's a single point between friends? Yeah, tell him that too. You know, if he thinks it's okay to raise it, how about lower it a point? No, I'm kidding. They won't do that. But seriously, what's a point between friends until you multiply the difference across $75,000 loan over 15 or 20 years? Now you are talking about serious money. They do mortgages, home loans at 15 years. This is the kind of money that buys a clean used car. And then comes the parade of products, extended service contracts, tire and wheel protection, gap coverage, paint protection, interior fabric protection, protection for the protection from the protection to protect the protected that you just bought. Some of these can be genuinely valuable, so I'm not saying they're all garbage, but here is the catch. If you roll a $3,000 protection package into a 20-year loan, you aren't just paying for the package. You are paying 20 years of interest on the package. You're paying interest on something you bought to protect something that you already paying interest on. You see what I'm saying? That's when the financial onion starts making everybody cry, which leads straight into the sentence that makes my ex-banker eye twitch. The intersection of doom, okay? You say, don't worry, Matt. I'm only keeping it for 3 years. 3 years. Yikes. That sentence sounds harmless. It just isn't. You just walk straight into the intersection of doom. Let's do some mad math. Financed amount, $72,000. Interest rate, 8.5%. Your loan term, 20 years. Monthly payment, $624 a month. Feels manageable, right? Barely more than a car payment. Now, let's look under the hood of the payment. Let's pop that hood open. During the early years of a long amortizing loan, the vast majority of your payment goes towards interest, not principal. After 3 years of faithfully making payments, you look at your payoff balance expecting it to be way down, but it barely moved. Meanwhile, your RV was bleeding value. An RV can lose 20 to 30% of its value the moment it leaves the lot. It isn't real estate. It doesn't sit on a concrete foundation appreciating with the neighborhood. It is a vehicle, a very, very, very expensive, fast depreciating vehicle with a toilet. Every mile you drive, the market adjusts your resale value downward a lot faster than your loan balance drops. So 3 years pass, loan balance owed 3 years, $67,000. Actual market value, $40,000. Result, you are $27,000 underwater. That is the intersection of doom. Your loan balance says one thing while market reality says another. So what do people do? What do people do? They decide to trade it in. They pull onto the dealer lot and say, I want something smaller, or I want a different floor plan. The dealer smiles and says, no problem. We can just roll that negative equity right into your new loan. That isn't a solution. That is debt wearing a different hat. You just took a $27,000 of old debt and added it into a new $70,000 RV. Now you are financing nearly $100,000 for a $70,000 rig before taxes and fees. You didn't escape the first loan. You put it in the passenger seat, and now it's riding shotgun forever. When people realize they are drowning, they start looking for life rafts. Make sense? The internet gurus pop up with a quick fix. Just put it on a rental platform. Let renters pay your monthly payment. Listen to me carefully. Revenue is not profit. You have platform fees, insurance, cleaning, storage, maintenance, tires, suspension, and slide-out repairs. You also have accelerated wear and tear that turns a 2-year-old RV into a rig that looks like it survived a demolition derby. Then there is the human element, of course. You're handing the keys to a $70,000 house on wheels to someone who has never driven anything larger than a mid-sized sedan. They are about to learn the ancient laws of RV physics. the back end goes somewhere completely different than you think it does. They swing too tight, they forget the awning is out, they scrape a pole, they apologize, but their apology doesn't pay your repair bill. Suddenly, your passive income empire turns into a $4,000 repair bill, and your loan payment is still due on the first of the month. Three escape routes. If you are currently underwater, what can you actually do? Here are three real paths forward. Option 1. Attack the principal. Most RV loans are simple interest loans. Extra principal payments directly reduce the total interest you pay over time. Stop obsessing over the monthly payment and start obsessing over the principal balance. Look at your rate, find out your exact payoff amount, and start throwing every extra dollar at it. Cut expenses, take on extra work, or sell items gathering dust in your garage. You need to force that loan balance down to meet the market value before the market value drops even further. Option 2, sell it privately. If you can avoid trading an underwater RV into a dealership, do it. A dealer has to buy below market value so they can turn a profit. That's just business. A private buyer will almost always pay more because they are buying it to use, not to resell, so they don't have to make a profit. Clean it thoroughly, fix the small cosmetic issues, take great photos, and hopefully you took care of it, and list it accurately. But remember, know your exact loan payoff before you list it. If you sell the RV for $45,000 and you owe $55,000, the bank will not release the title until the remaining $10,000 is paid, and you will have to bring the difference to the closing table. Writing a check for the $10,000 hurts, but taking a single $10,000 hit today is vastly better than dragging $27,000 of negative equity into another 20-year loan. Option 3, the nuclear option, voluntary repossession. Yikes. Before anyone thinks this is a quick fix, stop. A voluntary repossession is not a financial loophole. The lender takes the RV, auctions it off, and applies whatever money they get towards your debt. If there is a remaining balance, and there almost always is, you are still legally responsible for paying that deficiency. Add in legal fees, collection costs, and a ruined credit score. Do not make this decision lightly and based on a video. Talk to a qualified financial counselor or legal professional who can evaluate your specific situation, even though this is really good advice. This is an emergency exit when the building is on fire, not a shortcut because the line was too long. Here is the golden rule. If the only way you can make an RV affordable is by stretching the loan out to 15 or 20 years, you cannot afford the RV. That might not be fun to hear, but it will save you tens of thousands of dollars. Stop asking, what is my monthly payment? Start asking, what is my total cost? What is my interest rate? How much interest will I pay over the life of this loan? If I had to sell this rig tomorrow, could I walk away clear? Real freedom isn't a luxury rig chained to a 20-year debt obligation. Real freedom is having options. It's being able to change direction without writing a massive check just to escape. RV life can absolutely be a path to freedom. I am living proof of that. But finance the wrong rig the wrong way, and that freedom turns into a cage with better curtains. And here is the kicker. We aren't even finished. Let's say you do everything right. You buy smart, keep financing under control, and pay off your rig. You own it free and clear. You think you won? Not so fast, because now you face a completely different problem. The people who own the land you park on, investment firms, and massive corporate entities are buying up RV parks across the country. What? In many markets, that consolidation is driving up nightly rates, monthly fees, and the baseline costs on existing on the road. Even if you beat the RV loan, who owns the land underneath your freedom? That is what we are tackling in the next video. What is happening to campground ownership, why stay costs keep rising, and how to protect your lifestyle before parking fees eat your budget alive. Make sure you are subscribed so you don't miss it. If you're already living this life, check out the video on the screen right now for 11 ways to save cash on the road. And thank you very much for watching. Remember, you don't need 6 figures to live free. You just need the guts to live differently and the math to back it up. I'm Mad, and I'll see you on the road. Peace.